Well, more now on that new inquiry into Australia's banks, and SBS Finance editor Ricardo Gonçalves joins me now in the studio. So, Ricardo, tell me, to what extent have borrowers missed out?
Janice, so far this year, the Reserve Bank of Australia has cut the official cash rate 3 times, or 75 basis points, from 1.5% to 0.75%. The Big Four banks on average, however, have only passed on 57 basis points on principal and interest owner-occupier loans. Now, that means instead of saving just over $2,000 a year in repayments on a typical $400,000 loan, they're only saving $1,600. So, can the banks afford to do more?
Together, Australia's Big Four banks hold 75% of the country's mortgage market.
Australians are a notoriously loyal bunch. We have a tendency to stick with our home loan provider.
Why that is and what's preventing them from switching when there are better deals out there will be one of the things the ACCC will investigate.
A lot of banks would have you believe that it is a costly and time-consuming exercise. However, it is getting faster.
While there are fees involved, the application process should be smoother when the open banking component of the new consumer data right launches in February. It gives customers the power to securely share their banking information with approved providers. The watchdog will also examine how the banks make interest rate pricing decisions.
So the question is, how can the banks balance the need of borrowers versus depositors and shareholders?
Home loans are funded from a mix of assets, the international and the domestic money markets, the latter is impacted by the Reserve Bank, and deposits, which make up the bulk of their funding.
But savings account rates are at near zero.
Any dramatic cuts to those rates risks the banks losing customers and a source of their funding mix. Still, some experts argue that the banks can afford to pass on rate reductions in full to borrowers.
The banks could accept a lower return on equity, and we are seeing that to a degree, but only for new customers.
The banks say they need to make a reasonable level of return at a time when margins are being squeezed and costs rising. Westpac CEO Brian Hartzer said in a statement, this not only supports shareholder investment, it also underpins prudential stability and our debt rating.
Investors didn't seem too worried about this latest inquiry, with shares in the Big Four banks rising today in an overall stronger market. But there are concerns shareholders may be impacted if the banks do pass on the RBA's cuts in full.
We probably see dividends being cut. And of course, we could also see a cost to those people that put their money at the bank, so the depositors.
The Reserve Bank is being tipped to reduce rates again.
You'd expect 20 out of the 25 basis point cut to be passed on
As early as Melbourne Cup Day.
Now, of course, the banks don't pass on those cuts immediately, holding on to those profits for as long as possible. Shares in the Big Four rose today.